Welcome to another episode of the Ultimate MBA Podcast, your go to podcast for business, strategy, management, and whatnot. Today, we have again with us Ritesh M Jain. Ritesh is a macro trend spotter, a renowned finance guru across India, North America, and I think recently has also been awarded top 100 finance people in North America as well.
Yep.
And he has also, I think the total AUM that he managed was more than I think 6 billion US dollars when he was doing mutual funds in India. Ritesh, I think for people who are listening to us for the first time, we also had a episode with Ritesh where Ritesh talked about the macro environment of Canada, what's happening in India, about the per capita income, and a lot of what Ritesh said actually came true. So, in this episode, we are going to focus more about the investment strategies of NRIs. Ritesh recently launched a startup called NRIzen, which would help NRIs to invest back in India. Welcome, Ritesh, to the podcast again.
Thank you, Sachin. Welcome, everybody.
Hello. Ritesh, first question that I have: why did you launch the startup NRIzen, and what is its purpose?
So, Sachin, NRIzen is a platform for NRIs to participate in India's growth story through investing in Indian mutual funds. Now, why did I do it actually? Post-COVID world clearly favors India's more robust growth as compared to anemic growth of Western world, where most of the NRIs, most of the NRIs are in those five countries which we talk about. And historically, they have invested in the country where they currently reside. And even if they invest in India, it's mostly in Indian real estate. So I'll be covering all of this thing in the succeeding questions. But let's start with the most important reason why Indians NRIs have not been investing in Indian mutual funds. So if you look at it, this is a chart of Indian rupee versus the major currencies of basically those currencies where Indians reside in those NRIs reside in those countries. This is a last 3 year chart. Why last 3 year chart is simply because I believe COVID changed something where a lot of these countries spent a lot of money. India did not spend money. India's macro has become much better compared to any of these countries, which is reflected in the currency movement. Who would have thought Indian rupee will appreciate against most G7 countries in the last 3 years? So only country against which Indian rupee is still depreciated in the last 3 years, 13% is you will see that is US dollar. For Canadians, actually, you can see that there is a Canadian dollar in the blue one where it is flat for the last 3 years. And in some places like Australian dollar and JPY, last 3 years, Indian rupee has appreciated actually. So this is one reason where if you were investing, you were not investing in Indian financial market simply because you were afraid of Indian currency getting depreciated. I have the evidence in front of you, and I believe in the coming years, India's far better growth, will lead to much better currency performance of Indian rupee versus most of these countries, including USD, in the next maybe possibly 5, 7, 10 years. So this takes away one of those, the doubt in the mind that whether the value of the currency which I'll be getting back my money, whether that will be higher or lower. And there is second reason is that if you look at the government debt, on the right you will see that the numbers, on the left you will see the chart, you will see India's government debt. See, the India's government debt is only 83% of the GDP. See Canada, France, Italy, Japan, UK, US, only Australia is lower. But see, whenever you have higher government debt, that means government cannot spend a lot of money. They've taken it away from your future to spend it in the present. And the third chart is again the problem which you see, household debt. People like you and me, like the kind of debt which we have in Canada, the household have debt equal to 102% of the GDP.
And that's
Look at
really no.
so any way I look at it, post-COVID world actually favors India's economy, India's corporate sector compared to the Western world, and growth is expected to be far, far better in India compared to these G7 countries which I'm talking about. So you have the evidence in front of me, and I think this was the right time for NRIs to start looking at investing their surplus or building wealth or for their child's education or for their retirement planning have some kind of investments in Indian financial markets.
Okay. So now, since you have talked about this, the question that I have is, let's say that Indians abroad should invest their savings in India,
Hmm.
but how should they do it then? What should be their strategy about it?
So the strategy is simple actually. I would strongly recommend them to allocate to Indian mutual funds. They can open an NRO, NRE account. Any non-resident Indian or OCI card holder can open a NRO, NRE account in India and then get a PAN card and KYC documentation done. These are the three things you require to get it done. Now, due to massive digitization in India, all these steps have become smooth and should not take more than few days. I would say not between 15 to 30 days. All of them put together should take. Okay. So operations team of NRIzen can assist them in this process. For those who already have these documents, like I know most of the NRIs have already a bank account, they have a PAN card in India, they can directly go to NRIzen website where they have separate sections for US Canadian investors and for others. There are limited numbers of mutual funds which currently accept investments from NRI based out of US, Canada due to FATCA compliance. We have also put, kind of FAQs on our website covering all those points, including taxation. I'm also in the process of putting curated portfolios, so this is just NRIzen website. How does it look like? Equity, hybrid, discover funds for NRIzen, all these things. It's just a look and feel of NRIzen actually over here. Now, I'm also in the process of putting curated portfolios based on my view of which mutual funds will be best suited for the transition taking place in Indian economy from service led to manufacturing led. So I gave an interview to Money Control a few days back.
Yeah.
A lot of people liked that what is happening in India. You don't come to know about it, unless you go through this interview where I have put a lot of charts, a lot of data to support my view that tomorrow's India is completely different than the India which you were used to seeing in the past.
Why do you say so?
I believe that India is transitioning from a service-led economy to a manufacturing-led economy. I'm not saying services will be over. I'm saying the incremental GDP will come from manufacturing. I'll give you a small example. As per Morgan Stanley, today only 3% electronics only contribute, manufacturing only contribute 3.6% of India's GDP. By 2032, according to them, 8.6% of India's GDP will be contributed by electronics manufacturing. Can you see the incremental GDP coming from some other part of the economy which you had never thought will happen?
And what
All
would
this,
be the percentage? So when you're saying that 3% of today's GDP is around 3.5 trillion is the current GDP now.
yeah,
3% is manufacturing electronics.
yeah,
When it will be
it will be
8%,
600 billion
8% of
dollars.
what?
It will be $600 billion from $150 billion today. It will
Wow,
be
that's
$600 billion will come from electronics manufacturing alone. I've not talked about the other PLI schemes, what all is happening over there. You know, India leapfrogged manufacturing and went into directly into services because we were an English-speaking, nation. Digital infrastructure was very good. Otherwise, every country should transition first from manufacturing to services. So what you found in India is, the wealth was concentrated in metros where all those people who were working in services sector used to stay. We called it a K-shaped recovery where very few people participated in India's growth story. Tomorrow's India is completely different than the India of past. Tomorrow's India will be manufacturing over services, tier 2, tier 3 cities over metros, and people with skills, real skills, far better, making far better increase, seeing the increase in their income as compared to the desk workers, which we have created so many of them in the last 15 years. You can read all about it in this,
in your
interview
interview.
link over there so that you can just some thought process, because ultimately investing is about looking at future. Investing is not about looking at rear view mirror. You don't look at rear view mirror and drive a car, right? So why do investing based on who were the winners of the past? Why not look at what is a transition taking place? And I have captured all this thing in a curated portfolios, which will be ready by next weekend on NRIzen.
Okay. One more question. When you say that India is going to see a manufacturing boom, which
Hmm.
cities or which states are going to become India's Shenzhen, India's Guangzhou?
I have not worked on that. Okay. Although I know that I've been looking at where our Foxconn factories are coming up. I believe South India is the biggest beneficiary as of now of the low-end tech manufacturing. Please understand, India cannot do high-end tech manufacturing. We don't have those workers. We've not created those workers. But China is vacating the space of low-end tech because they are becoming a middle-income economy. India is taking away that job from US or from China
China.
and do low-end tech manufacturing, which is basically simply assembly and nothing more than that. Okay. So wherever the roads have been created, wherever they can find workers, you will find so many of those factories coming up. Now I'll give you since we are in this question, let me give you a number. Apple used to make refurbished phone in India 5 years back. This year's Apple will be making Apple iPhone 14 in 2023 they made with a turnover of $7 billion in India. By 2028, as per Apple's own number, their manufacturing, their total turnover will be $40 billion from Apple alone in 2028. So
Wow.
can you see what is happening? Their own numbers. I'm not giving the number from sell side or the government of India. I'm giving the number from Apple themselves,
So
right?
you are
So this
seeing 5 times higher
yes,
revenue even from India for Apple manufacturing. That's like
and
huge.
if Apple comes over there, it is like every board will be discussing if Apple is like a bellwether for India. If a company like Apple can come in India and become successful, I'm sure they can create an ecosystem around themselves itself. Okay, of this low end tech manufacturing, even if assembly. I don't care about it. I care about people getting jobs, and they spend out of their jobs. They don't spend by borrowing from future to do it, which is happening in Western world.
Makes sense. Totally makes sense. So now this another question. So a lot of people are not decided that they want to move back to India.
Yeah.
A lot of NRIs think that they have a much better life here for whatsoever reason in Canada, Australia, US. Should they still invest in India?
So my view is based on growth opportunities in India over next decade. If you would have asked me this question pre-COVID, I would have said, no, Western world looks okay. But the kind of money which has been spent by Western world post-COVID, which has just led to increase in inflation without increase in GDP. Okay, I think India is far better suited than Western world, and I just shared with you some data. Now, even if you invest in India, you can always repatriate back the money to the country of your residence. For those who want to know, so I have written so much about it. But I can assure you that today rules and regulations have become very smooth. You can easily repatriate your money. So why not, stay here, stay in the Western world. You're used to that standard of living. You're used to that kind of society. But shouldn't your money work for you? Should like today I'm pretty sure you are getting a little bit doubt whether I'll be getting my pensions, whether my kid's education is going to be very costly in the coming years. But do you have any avenues through which you can save that kind of money? I think some small amount of money then can be invested in India. And you can always repatriate it back. There is absolutely no problem. Rules and regulations are clear.
Okay, so now a question. In Canada, let's say Canada specific question. I'm
Hmm.
getting 5% on my GICs right now.
Hmm.
So does it really make sense for me to go and invest in Indian markets when I'm getting 5% here itself?
So yes, GIC of 5% is no doubt a great asset. Okay, no doubt. Yeah, even I'm all that we are getting 5% on GIC. But fixed income assets don't build wealth over a period of time. Please understand, we want to build up wealth. If you don't want to build wealth, you just want to have I have my inflation is taken care of, then you should be in fixed income. There is absolutely no doubt in my mind. But if you want to build up long-term wealth, you have to participate in the growth story through uh, you know, corporates through equity market. The growth of a country is captured in equity markets. But let me show you some data of Canada also.
Okay.
Canada is now a very, very mature market. This is a 15-year chart of Canada TSX. If you see this 15 years returns of TSX, it's hardly 1% annualized. Okay. So why? Because Canada has become a mature economy. Unfortunately, Canada is an oligopoly where there are only 4 or 5 companies have the bigger market share. So you are finding that yes, I'm getting some return in Canadian fixed income market because of GIC, which will start coming down as Bank of Canada reduces the rate. But you are not even, you're not even participating in Canada's growth story through their equity markets because Canada does not have a growth story. As per OECD, Canada's GDP between now and 2050 will be less than 1% annualized every year. So where is it that you are going to create a wealth or a retirement corpus for you so that you don't have to work for rest of your life?
Actually makes sense. So this chart is actually eye opener. Compared to this, I think S&P 500 of US has gone much higher than, or maybe
Yes,
Nifty has gone much higher.
exactly. So Canada, entire Europe, Japan has not gone anywhere for last 15, 20 years, including the UK FTSE. Okay. US is the only one which is outlier, and US and Indian market used to have a very strong correlation. Now that has broken out. If you see the US markets are flat for the last 2 years, and Indian markets have doubled in the last 3 years, kind of thing.
So
Correct?
actually, Nifty has gone from what 7,000 in March
Now to 20.
2020 to now 21,000.
Correct. It is all because, look, Canada's GDP, real GDP will be 1% in coming years. At 3% inflation, Canada's nominal GDP will be 4%. India's real GDP will be 6%. At 5 to 6% inflation, India's nominal GDP will be 12% in coming years. Corporate profitability is normally 1.3 times the nominal GDP as per some research papers. So you can multiply it 4 multiplied by 1.3 and you can do 12 multiplied by 1.3 and then you can compound it over the next few years and you get a return differential between Canada and India. For US, it is a little bit better than Canada. I expect their nominal GDP to be between 7 to 8%, Canada 4%, UK around 4%, India around 12%.
So on this, a follow from the last podcast that we had, a lot of people were very critical on you were saying that India's GDP has grown over so much and Canada has been linear so much to say. So they were talking about GDP per capita. That why don't we talk about GDP per capita? Uh,
Perfect.
now, is there a comeback on that part?
Yeah, this is the GDP per capita for you, since you've asked for it. Uh, Canada's GDP per capita is the orange. So what you will find is Canada's GDP per capita is the blue line. The yellow line is per capita GDP for UK.
Okay.
Uh, Green line is for US, and for India it is orange
Can you
line.
actually make it full screen or PowerPoint show PowerPoint mode so
Yeah,
we can actually see that this is very interesting chart. Yeah, this is okay.
yeah. So here you find that I've taken 10 years. Okay,
Okay.
you can take 20 years also. In 10 years, in spite of your population growing in India, right?
Mm.
Population growing dramatically in India. India has seen the highest growth in population. Your per capita GDP has gone up by 56%. Yes, you can say it is from a low base, but it is rising. For Canada, it is flat for the last 10 years. And unfortunately, in those 10 years, your real estate prices have gone bonkers. So can you see that flat per capita GDP? 6% growth in the last 10 years for Canada, lowest in these 4 countries which I have tracked. Your incomes have not gone up at all in Canada. It's 48,000 and
Eye-opening for a lot of people who think that Canada is solution to all of their problems.
sorry.
This is actually an eye-opening chart for a lot of people who think Canada is solution to all of their problems.
No, it is not. Actually, people are not understanding that an oligopoly economy where policies don't favor increase in employment generation, increase in small business creation, it is not good. Canadian economy actually depends upon two pillars. One is obviously the fossil fuel which we are talking about. Okay. And that is the biggest driver of the economy and real estate. Where is the business formations in Canada? There is no business formation. And I'm blaming policies, not blaming politicians. I'm blaming policies. Policies don't support small business creation. Policies support oligopolies over small business creation. Most of the employment is created at the small business level, not at the oligopolies. So whoever is coming to India, so we can bring all the immigrants, and I know why we should bring immigrants, so that our aging population is able to get a, there are people at the lower end of the society who pay taxes to the government, but they will pay taxes only when they get jobs. In fact, this year our per capita GDP will be lower than what it in 2024. It will be lower than what it is in 2023.
It is
Simply
actually a downline trend. Our per capita
yeah,
GDP hasn't, from 2012, the highs of 2012, it went
yeah,
down and it has barely recovered in last 10 years. And now it has
yeah. It is
started going down
6%,
again.
6% increase in last 10 years.
Yeah.
And India, in spite of increase in population, which is growing far, far higher, okay. Yes, Canada has increased population in the last 2 years, but India recovered the entire fall of 2020, okay, which happened because of COVID, and actually bounced higher than that, very fast. Okay, US has also done it. Even UK is also okay. See, it's very anemic. It's hardly anything.
Yeah. So now a question that, if there's a 25 to 40-year-old NRI who's listening to you right now,
Hmm.
how would you recommend that person to go about their investment strategy? Let's assume that they do not have a intention of settling anywhere, neither India nor Canada. What should be their overall strategy?
So there are two ways to think about wealth. Either save small amount of money every month so that you can think about retiring much before you should normally retire, or you can continue to spend without saving, and then you would have to forego your dream of early retirement. The choice is yours. Honestly, the choice is yours. Also, equity participation through SIP is the best way of growing wealth. It's like I'm talking about, it's a wonder of the world. Systemic investment plan. The earlier you start this habit, of investing, the earlier you will be financially independent. I can assure you. Start at the age of 25, curtail some spending, do SIP in India or wherever. Because if you say, no, I don't want to be in India, but invest. Saving is different than investing. Invest. Every month, some money should go away from your account and invested in the growth of your money should be growing for you. It should not be used for savings. And young people can take more risk. Older people cannot take risk. So earlier you start, the better your chance of building up wealth over a period of time.
Okay, this actually makes sense. Quite a good advice. So a lot of now what happens is, so when I went back to India this time, I saw a lot of other NRA friends as well.
Hmm.
So real estate is something that they prefer over equity markets.
Yeah.
So do you think real estate investment is a good option in India?
So this is the house price annual change index on overall India basis. I could not get it for different regions on overall
Okay.
basis. Okay. Can you see that there was a time when value of money used to fall dramatically in India and real estate used to do, right? When value of money falls, real estate do much better than any other asset. When the value of money does not fall, then real estate cannot give you outsized return. Now, let me answer your question in a different way. I think Indian government policies are aimed at employment generation through promoting in manufacturing. We can already see some effect via production link scheme, and biggest example again I'm quoting is of Apple, which will have a turnover of 7 billion in 2023 and 40 billion in 2028. Now, all these manufacturing units, whether for electronics or import substitution, will not come in metros, which are more service oriented. Hence, I continue to believe that real estate in metros will stagnate and prices will continue to move in tier 2, tier 3 cities, especially with good road connectivity. So, if you're investing in metros, I'm saying metros are done for real estate. For tier 2, tier 3, you have to find out where all these new manufacturing capacities are coming, whether the roads have become much better or not. Okay. But the policies, Indian government policies, which earlier used to favor, real assets over financial assets, have now changed to financial assets over real assets.
You will see more growth in stock markets
Real estate
versus the real estate.
is equities.
Okay, that's a good question. Now, so something, let's say right now I'm in Canada, and a lot of Indians are permanent residents here, not citizens right now, but maybe they're PR.
Hmm.
Should they really? And let's say that horizon of someone is like say 3 to 5 years, because that's when citizenship comes in,
Yeah.
and then they decide on what to do next, where to move next.
Hmm.
So, for a 5 year horizon of someone in Canada, NRI, do
Hmm.
you recommend them buying a house here?
So Canada's per capita GDP is less than $50,000. Okay, I've shown you that chart. Our incomes simply don't support the real estate prices, especially in big markets like Toronto and Vancouver. 2 years back, I had written about Calgary or time has come because I could see money moving from other part of country to Calgary, plus a lot of immigrants looking to come over here, plus a lot of tech companies looking to come over here. Now, even Calgary prices are also quite high. Okay. The only way Canadian incomes will rise is if productivity is improved and policies are made for business friendly environments for small businesses. Barring barring that, the correction which has started, okay, in Canadian housing is here to stay. If you don't want to pay mortgage for rest of your life, then curtail the size of the house which you intend to buy. I can assure people are used to buying bigger houses. I don't know why. Okay. Reduce your current discretionary spending to pay more towards your mortgage. Generally, when house prices fall, rents also fall, but not happening in Canada because a huge number of immigrants are keeping the demand high for homes. Okay. So this is a lose-lose situation for somebody who wants to, buy a house but cannot afford to buy. Neither he can afford to rent it. So I have not answered your question simply because at this point of time, I do not know what kind of advice which I will give you, which will be financially beneficial for you.
Actually, makes sense. So, buy only what you can afford, basically, and even
Buy
then the
smaller.
prices can fall.
Look, as it is, developers are smart. Market market itself changes its character, where they will find that bigger houses are not getting sold. There is no more money coming from China or Russia to buy real estate over here in Vancouver. Builders themselves will come out with smaller houses. Okay, smaller houses will be much more affordable. At least you will be having a peace of mind. Okay, if you really want to, don't go for bigger houses anymore. It is not worth at this prices.
Okay. So that was like almost to end of my questions, Ritesh.
Hmm.
Thanks for answering a lot of them. I hope NRIs who are listening, who listen to this, find value in this podcast. And if you have more questions, do hit me up, email me, and I'll get back with Ritesh on your questions.